Welcome back. If you work in lending, you have been asking yourself, can AI really be used in a disciplined way inside the credit process? Or is this just all smoke and mirrors? Meanwhile, the power of AI has advanced dramatically in the last 2 years, to the point where basic components of lending processes that used to take multiple prompts over a long period of time can now be handled by agents that convert cycle times from days into minutes. Today, you're going to see AI work through a commercial credit problem the way a banker would care about it. First, review the collateral, recognize the limitations of the source material, then analyze the refinance risk, size the loan to policy, run a multi-factor stress test, determine whether the loan is bankable at maturity, calculate how much the borrower would need to pay to right-size the deal, prepare a memo for the CEO, create an audit trail, and even draft the relationship manager conversation with the customer. Trigger warning, don't blink, because I will show you how AI does this all in 4 minutes. So here is the scenario, and one that is all too familiar and will become more common. A commercial property that was financed with a high LTV and a low interest rate 5 years ago. Now the note has matured. Notional rates are higher, while increased vacancy drives lower NOI. Here is the appraisal, courtesy of the Manhattan Appraisal Institute. Let's watch AI in action, and then I will show you the prompt behind the scenes. Okay, so watch very carefully because this will go quickly. First of all, the prompt produces a tight executive summary for the CEO, analyzing, discussing what the core issue is, talks about the debt side problem being very, very severe. And then it goes on to note that the loan is not refinanceable under the current terms, goes over a source review of the appraisal and the suitability of its assessment, and then quickly starts with the detailed credit analysis, recaps the core values that we uploaded as part of the analysis, gives another collateral review, so you'll see it recapitulating 1 or 2 times what it sees, a cash flow and leverage review, and then it starts going into its risk assessment. Section 4 is the maturity and refinance analysis, talking about the original LTV, the current debt service coverage under the full balloon refinance scenario. It gives a policy-compliant loan sizing analysis, giving typical bank policies, and then it gives its interpretation. Basically, it's an unbankable credit at this point. Now it swings into something a lot more sophisticated, a multi-factor sensitivity analysis. And this shows that under any scenario, under the multi-factor sensitivity analysis, the loan continues to have substandard debt service coverage. It goes over a number of refinance loan proceeds for the different debt service, again, underwater in almost all scenarios and interest rates, and then an LTV sensitivity table. This drives us to the right sizing shortfall table, and it ends with an analysis of what the loan needs to be right sized down to in order to make it a conforming debt service. You have the CEO executive memorandum to the CEO from the chief senior credit officer describing what is happening, what is driving the key risks. And then lastly, the script for the RM to the customer saying, here's what you have to right size down to in order to make this loan conforming. And almost as important as all this, an audit summary table, which minimizes hallucinations, showing the source of all the analytics. So that type of analysis in a conventional environment was about 3, maybe 4 days of a highly paid underwriter staring, comparing, writing, and spreading, all done in a few minutes that also produced a narrative and an audit file. What made it so seamless was the power of large language models to process a multi-stage prompt. As you can see, this prompt is extensive, and I wrote it and tested it over multiple iterations to the point where it can now be thought of as an agent. In other words, once the prompt is refined with supervised learning to produce the output I need, I can fire this up for any commercial real estate loan that is approaching maturity. Inside a bank's environment, I could add the credit policy to the docs and expand the prompt further to show a risk rating. Yes, the AI is that powerful. If you have been thinking about AI and have been a bit skeptical, I really can't blame you. But the technology has evolved over the last 2 years to support commercial viability and adoption into your credit process. You saw the potential time savings yourself. If you are interested in learning more about how to use the power of AI, contact me on LinkedIn and we can talk about hosting a workshop for your bank. Meanwhile, thanks again for listening and welcome to the future.